Hello everybody, this is Gabriel. With this new year, 2021, starting off nicely, I just wanted to share with you three key Forex charts you might want to have a look at and observe during this year. So the first one is a euro dollar. I've predicted a couple of months back that the euro dollar has made an important change in trend, which means a long-term uptrend here in the euro dollar, meaning that the US dollar should get weaker over the next 5 to 15 years. So what we're looking here is that's a huge consolidation that took a couple of years from the great financial crisis to 7 years, and now it's about to trigger when the price re-breaks this green line. So you can have a look at that and observe it. If it does, we might see a swift move to this next target level. So this is the other very interesting chart. That's the US Swiss, and this is down, meaning the Swiss franc is getting stronger and stronger. This is the consolidation pattern. It has already triggered more than a year ago, and it's about to make a big stop run move once this wick low is broken lower. So we're getting close here. Should that happen, well, this as well should develop some down momentum, and this is the trajectory where I think price will go. So we should see a lot of Swissy strength, and again US dollar weakness. Now this is the third one, Australian dollar, US dollar. And after this, we're going to have a look at a client trade. So the Australian dollar has actually been the weakest of the currencies I'm trading. It went from up here to down there. Well, it basically halved in value. So the US dollar was strong and the Australian dollar particularly weak. What we see since this spike low, well, this is the Corona crisis scare, right? The spike low. In March of last year. Well, since then we've seen a big increase in value of the Australian dollar, and again here I think this is a turnaround, and this will be, well, this chart will go up for the next couple of years. So this will particularly be good for the Australian clients, right? Because their Australian dollar is getting more and more valuable against the US dollar. So what we might get here is, we might get a spike. So price likes to gets pulled towards the 200 moving average, and what we often see is a spike through. So there's a lot of good things to come out of this chart. Now the New Zealand dollar is very correlated to the Australian dollar, right? So the New Zealand dollar is a very strong currency as well. So now let's have a look at a client trade. So this is a trade taken from my client in Thailand on the 5-minute chart. This is a pattern. This is an S2 pattern on the 5-minute. That's one time frame higher, 50 and 60. And as you can see, this trend is nicely uptrending, and this as well. So my students only take trades, well, including myself, only in trend direction, and the moving averages are important. Can you see how prices bounces off? Well, these are the situations we are looking at, and as you might see from the lower three charts, these are higher time frames. They're all directed towards upwards, right? So there's a lot of upwards potential here, taking a very low risk idea, and ideally we can trade these intraday trades into a swing trade, carrying it over in the longer trade and actually trading higher time frames, be it the 240 daily or weekly. So this trade generated a nice R multiple as well, as you can see here. So price went off, and the trailing stop generated a nice R, just short of 4R. So 4R, the stop gets tightened, so this could have even been a better R result. This ended up as a 2.5R. If you're interested in more information about my Forex systems, just go to my webpage, IntuFX.com. Into like intuition, and FX like Forex, IntuFX.com. Thank you.